Hello and welcome to today's Trading the US Open Live here with the Live Trade Room. And today now is Wednesday the 29th of August. Just as a brief introduction, what we look to do is to identify some high probability trading opportunities during the US Open, which is often when we get the really high probability trade opportunities. So what we really look to do is to become a master of price action. So we're really interested in what price is doing, and we have a bit of a process that we can adopt to identify these high probability opportunities, and then we look at our ability to execute with consistency and discipline, and then we go through a bit of a process in terms of managing that trade. Those of you that were able to join us yesterday, we were able to get into a couple of good profitable trades, and we're able to manage those to secure some consistent returns, and we'll be applying that same kind of approach to the markets on a consistent basis, all with one aim, and that is to book in consistent returns. So without further ado, let's refer to our risk warning. Please do make sure that you do familiarize yourselves with the risks involved in trading these markets and take note of our risk warning. Okay, so just before we begin, let's do a brief review of potential market moving news. This is an important part of a trader's toolkit to know the news flow, to see if is there any news events that have the potential to disrupt the trades that we're in. So we do have a significant news impact that could impact the US dollar at 1:30 today, so that's in approximately 20 minutes time. So we'll come back to this news event to see what impact it does have on this market. And for anyone interested in trading the crude oil markets, we have a significant event, which is the weekly crude oil inventories number at 3:30. So we're looking for strong variations of the forecasted number, and that will give us an indication in terms of whether these come, and we are due back to full trading conditions from next week onwards. So today, couple of interesting news events, let's say, and we'll see how these markets interact with these events. So we'll come back to this prelim GDP figure at 1:30. So let's get straight into the charts. There's been some interesting developments, let's say. So let me get this off the screen. I can see it following us around. So this morning we identified a viable opportunity to sell the euro dollar below the 16.61. The reason why we say that is we've extended to these highs up here. We've failed to break consistently above the 17.28. We've actually rolled over, and now we're trading below yesterday's low. So that normally is quite a significant event. So when we take that into a smaller time frame, we can see that we've had a bit of a flush down prior to the US Open, but now the US markets are open. We're getting an influx of traders entering this environment now from the US. We've seen a bit of a pullback. We've retraced this previous 15-minute candlestick. So we're just lurking above the daily low, which is 16.61. So really we're wanting to see, ideally now, a break below the 16.50 level for us to get into the euro dollar to the downside. So that's the euro dollar. The pound dollar, we're only interested in even potentially considering to sell the pound dollar below yesterday's daily low. Similar kind of situation, except this time we're getting a double top up here, as you can see, a rejection of these highs at the 29.36. So looking for opportunities to sell this market below yesterday's daily low, and if we don't get that break below with structural failures and we don't see other strength entering the market, then the dollar market, should I say, then of course we won't be looking to take any trade in this market. The next market we were looking at, which is a sell trade in the Aussie dollar, was ideally below the 73.30 or the 73.21, I think it is, and we've already had a strong move lower. We're now testing this morning's lows as well in around these levels. So we've just literally broken out. So we have been moving sideways for the majority of the European session. Now we're entering the US session. We've had a bit of an explosive move very, very recently. Interesting to see if we get a little bit of a bounce back to the 72.98, which is roughly kind of where we are now. So there might be an opportunity, a good opportunity for us to sell the Aussie dollar. We'll take note of this low in here as well. See how price behaves around this level. So we'll come back to this shortly. So we'll have a good strong look at the euro dollar and the Aussie dollar. The pound is still looking quite bullish. We found out this morning that the expected time frame to conclude some of the Brexit negotiations was supposed to be in 7 weeks' time, and now they're saying it's very unlikely that that will be achievable. So there is a news event in the market suggesting that the Brexit negotiations, this next round of negotiations, are going to take a little bit longer than anticipated, and as a result the pound is strengthening as a result of that. And we're seeing that across the board when we look at the pound, the euro pound. So it's really strengthening against the euro, and also well, we're not quite getting the move actually just yet in the pound yen. So the yen is maintaining certainly its strength against the US dollar. So that's why we prefer to get into the euro dollar as opposed to the pound dollar, and we're not in the same place at all in these two markets. So so out of these two markets, we'll be looking to sell the euro dollar and the Aussie dollar. Just want to keep an eye on the pound dollar as well. I don't know, Hans, if you're still with us this afternoon, but we were discussing this morning, Hans getting into this market 28.50 with the expectation for this market to push up over and above, or so I think up to the 1300 level, so the 130 level, should I say, and we got a push up to the 12900. And just currently experiencing a pullback, but hopefully we'll get that next extension to the upside soon. Whoops. So just put a couple of little posts there up on the YouTube chat function. So any comments you have to make or observations on any markets, or if you happen to be trading some markets yourself, do let me know what they are, and it'd be interesting. We can obviously have a look at them while we're waiting for some of these markets to move. The interesting setup in the euro dollar is what we don't want to see or experience is what's called a double bottom, excuse me, technically a structural failure. But let me show you what I mean by that. So we're getting a push lower. If this is a rejection of the lows and we get to make a new high around the 1668, if we attempt to make a new low and this fails, then the next time this market breaks around this level, then it's all change for the euro dollar. So we do have a bearish view on the euro dollar, but only below the 1661. If price is above that level and we get a structural failure, we're no longer looking for opportunities to trade it. We're looking at the 2900 very, very carefully in the pound dollar. So we want to see if this market pushes up, pulls back, and then extends to the upside. So far so good for that trade, Hans, if you're still with us. Aussie dollar, just getting a pullback off the lows, which is kind of what we would like to see. The level we'd like to see this market come back to is we're getting quite close to that now. And if we get a little opportunity that we're going to get a bit of a reversal signal, then we might look to get into this market around this level in here. So as we are at that point, the US oil market right now is doing very, very little. Not much movement in 4 days. We're getting a strong sort of weakness creeping into the US dollar, so maybe that might be signs of the markets to come. Maybe today we'll wait and see. Let's go into a smaller time frame, and let's even take it down even lower. So this is quite interesting, because when we look at this now on a minute time frame, we have a clearly defined structural failure now. This is what I was talking about. This is when buyers can really trade this market with confidence to the upside, and we are now above the 72.98 level. So be interested to see if a trade exists in this market or not now. So at the moment we're getting the pullback off the lows. There's still scope for this market to creep lower, but we might have to keep a close eye. At the moment it's just a pullback on these lower time frames. So let's see how it fits in with the picture from other markets. Quick look at our two trades from yesterday, where, is this market strengthening against the US dollar? The Swiss, the answer is yes, it is. The dollar CAD, the dollar is still looking fairly strong against the Canadian dollar, but we're not too far away from these lows at the 97.44. So let's see what happens in these markets. Right now, marginally, there's still a potential opportunity to sell the euro dollar and the Aussie dollar. Not so much the pound dollar, but we just keep an eye on this market. And of course, the potential for this market to sell off below the 98.57 in crude oil doesn't really stack up for us just yet. But we do have crude oil figures coming out within a couple of hours. So a lot of this price action could just be in the build up to the GDP figures. Of course, GDP is a pretty crude but quite important economic indicator for institutions like the Fed and your banking system as a whole, and consumer confidence and retail sales and all these types of things. So GDP, gross domestic product, is quite a good arbiter for an economy to experience how things are performing for that economy. So the interesting thing about the dollar is there's a lot of people, including Donald Trump himself, suggesting that the dollar is overvalued and it needs to weaken, and that the administration might be pursuing policies to weaken the US dollar, which of course they're able to do. But then that is backed up with a really strong US economy. And normally when performance of an economy is good, it normally strengthens the currency. Now, as well as that, we also have the Fed that are currently increasing interest rates. And if you increase consecutive interest rates, like the Fed are currently looking to do, then the reality of that is it's normally quite supportive, again, of the US dollar. So there's a lot of arguments to be had, pro and con, for and against the US dollar. So for us, if that's the case, we want to rely on our technical analysis to sort of try and navigate these markets and see if we can get in and out of these markets. We're seeing a bit of a rollover back to the downside, so we might just wait and see and wait for the news out in 7 or 8 minutes time without making a decision in these markets, just because if we get the move lower, we might want to get into the Aussie dollar, but we don't want to get in a few minutes before the news events comes out and we suffer from a bit of whiplash. So a little bit of patience now going into this news event would certainly make a little bit of sense. So we still have a directional bias to the downside in the euro dollar and the Aussie dollar. Don't know how long that will last for. We might change that bias pretty quickly, or maybe even disengage from those trades and maybe refer to the dollar Swiss, for example. So the US oil, we're still within yesterday's highs and lows, so there's plenty of scope for this market to move in either direction. So there's definitely a bit of strength building in the pound. We're attacking the 12900 level now again shortly. Okay. So let's be nice and patient. Let's see if we get a structural failure to the upside in the euro dollar. If we get continuation to the upside in the pound dollar, then obviously a sell trade would no longer exist in these markets. A sell trade still exists in the Aussie dollar, but we shall wait and see. Let's look at all of these markets in 5-minute time frames. So really, from a directional bias, we're looking to sell. We're not looking to buy. We expect this market to continue to move to the downside. So we're looking to go with the more recent trend to the downside. When we look on the daily time frame, we're potentially selling a really significant pullback, expecting this price to continue lower technically until something significant changes. So we do have the 1661, which is yesterday's daily low. We kind of have a more important level in this market now, and that's really the price 1668 to the upside and 1655 to the downside. If we get a break above 1668, that suggests to us that it's a structural failure and we're heading to the upside. If it's a break below, then we're continuing our trend to the downside. From a technical perspective, we kind of have this kind of channel as well. So really this could just be a good opportunity for traders to start selling at that level and get the next move to the downside. So, but we're not really going to get in from a consistency perspective unless we're below that, but likely to get in around this level in here, the 1655, or we have the 1650 level just below it. So any price around here we will kind of look at getting in, and then we'll just gauge it accordingly. So that's the euro dollar. The Aussie dollar getting a nice little strong pullback. We do have news out, dollar news should I say, in just 2 minutes time, so we'll get ready for that. So we're strengthening right now, but we don't necessarily want to get in now just prior to some news coming out that could impact the US dollar significantly. However, we might sort of prepare a potential sell trade below the 72.91, and we could use this high here as our stop loss. So we do have something that is workable. We're just wanting things to stack up a little bit more. Getting a bit of a rollover, getting close to that 1661. So we know where we're at with these three. So let's have a look at the pound dollar. So we have the highs up here. On the 5-minute chart, we have a significant low. So that could be a strong reversal point just in here, the 28.77, which could give us an opportunity for this market to push lower. So right, let's get ready for the news event and see if we break these lows to the downside. So before I switch, we'll just look for opportunities to sell at that point. Sell the Aussie dollar at this level in here, the 72.91, and potentially, although we need to wait for a break of the daily low, which is the 28.59. So that's the higher probability trade. So we'll call it trade probability number 1, and that's probably a lower probability trade. So let's, for consistency purposes, perhaps wait for the better quality trade and maybe see if we get in to the euro dollar and the Aussie dollar to the downside, and maybe later on we can add the pound dollar. Okay, so that's the potential move. Let's get up our trading platform. The news is out in just 1 minute. What I might do is just take this off for now, and let's see when this news is being released. So we're expecting 4.0, and if we get a significant deviation either above or below 4.0, you can see previously we saw a 2.2, so obviously a 4% growth is really quite significant. If you guys remember, Trump was quite happy with growth in the US. Right, so we've got a stronger figure than anticipated. So the 4.2% is now out. That should support this market. We can see that both of these markets just extended lower. So now, if we go into this market on a minute time frame, we've currently got a little bit of a rejection just at these levels. We're getting, interestingly, a little bit of a bounce where this should really support the price. It was more than expectation by 2 basis points, so that's quite important. So we will see if we get in around the 72.90. So we're ready to get into this market. Oops, excuse me. We nearly had breaks across these two markets here. So 0.10. So this is the trade size that we adopt or we trade with when we're trading these financial markets, and with our exposure, we're looking to expose about 1% in each trade we take. So for our traders at the Live Trade Room, we have a trade size calculator which our traders can get used to using, so I'm ready to get into this market now. I just want to see if we get a close. So let's see some extension beyond that level, and then we're into the Aussie dollar to the downside. So let's get into that market now. So we're now selling the Aussie dollar, and we're waiting patiently for a potential opportunity in the euro dollar. So straight away, we want to see at what price would we look to place our stop loss. And we're currently getting in at 72.89. So really we have to go above this level, don't we? 72.99. So a 10 pip stop loss plus a 3 pip sort of spread just above the highs here. So the high of this market is the 72.99. So really we want this at this just slightly higher than that current level. So let's see if we get some continuation to the downside. This is the level that we want to get into. This move here occurred nearly a couple of hours ago now, at the latter part of the European trading session. So before the US traders got involved. So when we measure, it's a 13 pip stop loss in that, so it's actually a bit less than 1% in terms of risk of our actual trading account. So we're in the Aussie dollar to the downside, so let's hope we get continuation now. We kind of should do. Certainly we have the fundamental news event backing us as well. Both of these markets, and all three of these markets, basically showed the potential for this market to roll over to the downside, but buyers have sort of they've not let it break these sorts of levels really just yet, but that can very much change. And let's see if we get a little bit of move in the Aussie dollar. So let's have a look at some of these other dollar markets. So the dollar is strengthening against the yen. Not much happening against the Swiss. Same situation, is strengthening mildly against the Canadian dollar. The New Zealand dollar, it has strengthened really over the last couple of hours a little bit more. So who knows, will we still see that dollar strength move start to kick into the market? We'll have to wait and see. It certainly has a fundamental event supporting it, so it's definitely worth looking at. It has a technical setup as well with the fundamentals. Not so much the sentiment. The sentiment seems to be relatively bearish, the dollar at the moment. So we're kind of looking at 2 out of 3 really as things stand. And then the gold market. So it's not really reacting to the dollar's strength, which would see this market sell off to the downside, but you would still prefer to be selling this market than potentially buying it. There's a lot of resistance up at these levels here. So for us, when we look at these markets, it doesn't give us a fantastic opportunity. US oil moving sideways. And let's look at the S&P. So we're really struggling to get any continuation in these US global equity markets. So we get one move, and then things start to sort of go to sleep, and a little bit of selling coming in, probably off the back of a bit of pound strength as far as the FTSE is concerned, and the stocks and the franc as well is not really doing an awful lot. So not an awful lot of opportunity really in these markets today, but let's have a look at this price action here, and we'll see what opportunity the Aussie dollar has given us. So really, we are adopting, let me get these markets back up. We're really cherry picking some decent opportunities here as best we possibly can, even though it's very limited opportunity really as things stand. And we're quite happy to continue to look at these markets. So let's see if we get continuation at this higher price. If we get in at this level, and I am looking very carefully at potentially selling the pound at a slightly higher price, going against potentially our normal rules, but this is below the 2080 level. What I might suggest on doing is taking a half a risk on this trade. 0.5, taking a reduced risk if we get a break beneath this low, and see if we can add to any potential strength coming into the dollar. We're currently below the 20-day move, the 20-period moving average as well. So let's have a look at this on a 1 minute time frame and see how price stacks up around these lows. So what I'll do is I'll just make that our new low, our new entry price potentially to the downside, and see if we get the follow through that we could expect in that market. So we want to try and add to this position if we can by getting into the pound dollar. So let's see how we get on with these trades now. There's even a little bit of a reluctancy for the euro to strengthen against the dollar. And again, we'll just wait for the close below the 28.76 and see if we get into that trade to the downside. So we just want to see that level break to 28.76, and we'll have a look. Sorry, just bear with me a second. Hello, Amir. We got your message. You've sent it through our website by the looks of it, which is absolutely fine. We just picked up on it. Do feel free to post as well through the YouTube channel, because I'm obviously monitoring that live. So feel free to post any comments that you have into your chat box here on YouTube. That would just be a little bit better for us. But I was notified, and you were just asking about a take profit through on the Aussie dollar. So yeah, you should be able to hear me okay, so that should all be working fine. So interesting. So what we do, Amir, when we trade these financial markets is, especially when we day trade, we want the markets to determine exactly when we exit these markets. I'm just looking at the pound dollar as I'm speaking to you all. So what we're looking to do for the remainder of the session, Amir, is to trade the and I don't want to miss the pound dollar. So what I might do is I might just drag this down, so we'll split the screen in half. So let me explain. So if we work with the assumption that, I'll take all this off, that markets move in this fashion, I would hope you would agree that that's generally the way that these markets move. If you get in at a predetermined level, which is kind of what we're looking at with regards to the Aussie dollar, we're looking to, we've created a low, which is here. So that's point number one, point number two, point number three, and that correlates to point one, point two, point three on this particular chart. So we're expecting this market to continue lower, okay? So pullbacks is absolutely part and parcel, like we're experiencing. So I'm just looking to get in now to looking to sell the pound dollar and add to this trade to the downside. Please note, we're taking half the risk that we would normally take on a trade like this. Whatever level and price we look to get into these markets at, we'd be working with a structural high to 93, 92, and we'll just do a few pips above that. So that's our stop loss, that's our risk exposure to the downside. So this is our line in the sand. When we look at this price action, we say, right, if price reverses back above that, we want to keep a really tight control over our exposure. We can see exactly that we are exposing 20 pips on this particular trade, but we're working half the volume. So just because we are getting into this market above the level that we would ordinarily look to get into it. So if sometimes we can have that flexibility with our trading, where we can apply a little bit of discretion to to allow the market to just roll over, and if we capitalize on that rollover, even though we've got a level of support coming in at 28.59, we know that this market should be very likely to bounce off this level to this downside and then bounce back, maybe even somewhere around here. Might give us multiple opportunities to sell it. So we've got loads of opportunities now, and we've decided to get into this market early and see if we can capitalize on a decent winner. So currently our stop loss is just above this level. On average, we look to risk about 15 pips per trade, but depending on the trade and the structure, we can hopefully make a fairly swift decision in terms of is the amount of risk appropriate. And because we've reduced down our normal risk by half, we are trading summer markets as well. We're going to get a pullback. We're quite happy to take on that risk and just react to the trading conditions, really, more than anything. So to answer your question, Amir, if you are still currently online, I'm not sure if you are, so maybe say hello through the YouTube channel if you can. If not, do send another message through the site. But we're going to look to trade a structure. So this is where trading the markets become sort of quite scientific and a little bit more math based. So we look at this chart here and we see that the range, the difference between the high and the low. So the high is the 73.48, the low currently is the 72.88. So we can see now that there is approximately a 70 pip, 65, 70 pip range in today's price action. So if we look at a 20 period ATR just at the bottom of the screen, we can see that there's if you add up the highs and the lows over the last 20 days, there is normally a range of 62 pips. Now that's currently where we're at, between 65 and 70. So we're a little bit over the norm over the last 4 weeks. And that in itself is fine, because we can look at these candlesticks here and we can assess the high and the low. 73, 79, 72, 80. So that's 100 pip range. And again, just a few days ago, we can see that 73.56, 72.40. So that's nearly 116 pips move in that market. So we're currently 65. So there is scope for this market to improve. We're not going to be hanging out for, you know, a 60 pip winner. That's not going to be the case. So what we want to do now is say, right, well, there's plenty of scope. There's certainly a good multiple of our risk. We could easily take out, if we're risking 13 pips, we could easily take out a 2-to-1 positive risk reward, 25, maybe 30 pips in this market. And we'd be very comfortable and obviously very, very happy with that. But the reality is we obviously do not know. So what we want to do is trade the structure. So like I was saying earlier, if this market is moving in this way and it's continuing to move lower, our question to you is, try not to arbitrarily just take profit here, for example, unless you have a reason to do so. You know, why not just work with the highs and allow the market to unfold and give yourself every opportunity to move your take profit each time above these structural highs. So really, to answer your question, we're going to work with an organic take profit depending on what the market decides to do, and this is called letting your winners run. When we get a good winner, we can do this by continuing to increase your profit as the market is moving in your favor, as opposed to obviously jumping out super quick. And sometimes you need to move away from the markets for whatever reason, but we prefer to let the markets determine exactly what price we're looking to trade these markets at. So we're not going to work with an actual take profit. We're going to just trade the market organically or visually and manage that risk, which is I suppose a very important part for us is, and if you can see on the right of your screen, becoming a master of price action involves your ability to manage these trades effectively. Again, using price action to do it. So we do have the tools necessary to navigate these markets, and what we want to do is mitigate risk as quickly as we can and look to let our winners run as best we can. And that's why we don't work with a arbitrary, 20 pip winning sort of mentality. Now, I must stress at this point that there is discretion. There is the opportunity to see a really strong move in a market and say, right, I want to now take profit. I've had a really good day on that market. I've got in and out in a relatively quick fashion, so I want to book that profit, and that normally for us is around a 50 pip mark. So that gives us fantastic risk reward, a significant multiple of our risk, and it allows us to pack up and almost, you know, have enjoy the rest of the day, so to speak. So there's a lot of aspects to taking profit that is all about your ability to manage that trade effectively. So if this market continues to move lower, we're going to really look to go with it, and we'll make that decision on a take profit as and when. So a good example, excuse me, sorry, just move this a little bit. I think that was the level. So we'd still expect from here this market to move lower. We've still got strong sentiment to the downside. Now this is a good example. We've had to move lower. We've been working with this level, the 28.76. We're below the 28.80 level. We've had a nice strong run up and move below that level. Now we've had a strong pullback to that level. So if we clear these lows, and we're going to switch to a 5-minute chart in a minute, then what we could potentially do is to mitigate all the risk on this trade. So but we'll bide our time. We won't presume that this market is going to continue to break the low to 28.66. We're going to try and give it a little bit of time to see if it can develop for us, and hopefully we're creeping into a little bit of profit now in the Aussie dollar. And again, we could, if we break these lows down here, we could very easily bring down and mitigate our risk on this trade down to this level. So we're not going to work with a take profit right now, but that will obviously change at some point if we get into a position where we're risk free, and we might decide to take profit shortly. So we do have a strong piece of news in behind us when we're taking this trade. So that's the good news. Let me get up the trading platform. The news. The Canadian dollar current account is slightly less than anticipated, not by a huge amount, but it's still less, so potentially negative there for the Canadian dollar. And we have crude, we're going into crude oil inventories now as well. So all of that is there ready and waiting for us. So let's have a look at the crude oil. Let's bring this. So again, very little movement. We're not that likely to get a movement now before 3:30 in the US oil markets. So we'll keep an eye on that one. Now what we'd like to see is this market create a new low below the 28.69 level. Okay, so now we're in those two trades. We need to just manage them effectively, of course. Okay, so looking at the Aussie dollar on a 5-minute chart. So let's switch across then to the 5-minute. It's important to note as well, really, that and it was a question that we were asked over the last couple of days, and it was something along the lines of what time frame do we trade and what time do we use for our stop loss? And that's a very, very interesting question to ask, should I say. And the answer is, it depends on the time trade, the time frame that you're entering the market. So, for example, there we like to get in at these markets on 1 minute time frames. The only reason for that is we can get into trades a little bit earlier than if we were waiting for a close on a 5 minute candlestick. So obviously markets can move quite a lot in 5 minutes. So if we get in on a minute time frame, we use normally the structural high on a 1 minute time frame, and then we switch to 5 minute charts to manage that trade, and that's the key. You get a different outlook on different time frames, of course, and so now we're going to manage these trades, both the pound dollar to the downside and the Aussie dollar on a 5 minute time frame, and we might flick in and out of the 1 minute and the 15 minute accordingly. But in terms of what time frame do we use to enter, normally it's the 1 minute. We can get in on the 5 minute chart on occasion, but the time frame that you use to calculate your stop loss would normally be the same as the time frame that you're using to get into those trades. So I do hope that makes a little bit of sense. So these markets don't certainly want to go anywhere that quickly, which is fine. Just give them a little bit of time to just unfold. We do have a strong news event, and that news event is a greater than expected GDP figure, a prelim GDP figure. Now this is ironically the second of 3 GDP figures. For whatever reason, we start off with the advanced GDP, and then the second figure that's released is a preliminary GDP, and then we have the final GDP figure. So as you can see, it's a really strong performance on these previous GDP figures. So I'm sure we'll hear a little bit about that in the press. So that's the news event. Okay, we're finally getting these little moves. We just want to see this level break here, the 28.69. We're getting a nice move now on the Aussie dollar, so we expect this to the downside. So hopefully we'll get some continuation now. We kind of want to see the pound dollar just break lower and hopefully close below that 28.69, and the Aussie dollar below the 72.88. So we don't want to see strong rejections. We don't want to give buyers opportunities to get into these. We want to see some continuation. We might need to be super patient. As I'm speaking, I'm seeing the rejections on all three markets, so we'll have to wait and see. So yeah, I suppose the difference is between a minute time frame and a 5 minute time frame is that you really want to see the close, and what's happening on a 5 minute chart is a little bit more important than a 1 minute chart, and a 15 minute is more important than a 5 minute. So that's how we use multi-time frame analysis. Really strong rejection really in this candlestick. So it looks like we might be in for a bit of a turbulent session for the US dollar, but we've done our consistent analysis. We're quite happy to be in these trades to the downside. We're in a little bit of profit on both trades. Nothing to scream about just yet, but hopefully that opportunity will arise and we'll get continuation. We'll get a nice strong rollover, and hopefully we'll book in a bit of profit again today. And nothing's happening in the US oil, but we're going to keep watching it going into the the crude oil inventories might wake up this market, and if we get a rollover to the downside, we want to be ready and prepared for it, and we might be able to just get into this market and take a bit of a scalp and a nice move lower if the market performs that way, and of course it doesn't have to. So let's see, we've got 2 minutes left really for the Aussie dollar to just fill out to the downside a little bit. I probably need to keep talking because as I'm talking about this market continuing lower, I can see the reversal candlesticks. So that's not a good sign on a 5 minute chart. So let's see how we get on with these markets. Any questions about anything covered, guys, or any other markets you'd like us to look at? More than happy to do that. Just post them into your chat box, and of course I'll get back to you as soon as I can. Okay. So when you get a candlestick like this, what it's really telling you is that there's something or someone in this market looking to buy at these lower prices and reject these lows. So almost going against the flow of this market. So that's quite interesting. And what we don't want to really see is the 72.88 to really sort of hold up for us and become a really strong level of support, potentially offering opportunities for this market to push higher. We kind of want to see this level be broken. Now, we don't need to do so in the next 5 minutes or anything, but if we're struggling to break this level in the next hour, for example, then it's probably telling us that we either wait for the breakout to the downside and wait for it to be ready, or we're likely to provide it as a level of support, pushing prices higher, which is obviously not what we want. We want this market to sell off. So that's the only thing about this kind of price action, is it can give an opportunity for buyers to gain control. But right now everything's fine. There's no significant problems. It's just the rejection of the last 5 minutes was quite an interesting. Same in the euro dollar. This market looks like it's reluctant to break lower or break higher, isn't it? Like that's unfortunately the case really for this one. Hi Syed, good to have you join us. So Richard, just want to ask you something. You do not have to say anything in live. I'm not too sure kind of what that means, Syed. If you do have any question about anything covered, anything about the trades we're in, then feel free to post whatever question you have for us. Is there any possibility you can create a WhatsApp group for premium members and publish any trades you take and close, as most of them work and it's very difficult to come on YouTube every morning and afternoon? Appreciate that is absolutely difficult for some of you that are trading the markets during the day. That is effectively offering kind of trade signals. You see, we have a Facebook group for our traders where our traders can interact already. Now, a lot of education companies will just offer trade signals, but we're actually focusing on someone being able to trade the markets themselves and really benefit from learning how to trade and to execute those trades. Yeah, we do appreciate that it is difficult for traders to join us live. There's we have a lot of traders join us every evening, of course, to trade the capital growth webinar that we make available to all of our traders. So maybe trading longer term time frames, if you are tied up, Syed, during the day, that might be a better solution for you. We do trade daily time frames consistently. And make returns, not as much as we do when we're trading the markets live. We just have I suppose a little bit of a concern to just dish out the levels, because you're not really learning anything. You're very dependent on a third party, and we're not sure how effective it can be. There's lots of issues with traders not being able to get the signals at the time, and maybe they get into trades at a later time, and all of a sudden it's kind of your fault for saying you should have bought this market at this price, because things can obviously change very, very quickly in these markets. And it's really more geared up for those that are available to trade the markets live during the day on an intraday basis, learn the skills, and do so with support from us here at the Live Trade Room. And there is a cohort of people that are very interested in doing that. Of course, we appreciate most people are at work during the day and don't necessarily have that time available. But we do post through our own YouTube channel, our own Facebook channel, and provide updates on trades and things like that for our members of the Live Trade Room. So if you do become a member, you will get access to that. And if you don't have access to that, then let us know and we can sort that out for you. So yeah, unfortunately, that is our kind of our honest opinion, Syed. And there is, the whole regulatory environment is shifting quite significantly. And from our perspective, it can't come quick enough. There's a lot of operators, I'm sure you guys are very familiar, that will sell third-party trading signals and ideas. They can't necessarily stand behind their own trading approach in a live and dynamic environment, which is something we pride ourselves on. You know, they will dish out a lot of signals. They'll promote a lot of only their profitable trades. They probably won't reference anything to do with their losing trades. And it's really, I guess, from a trader's perspective, you know, I suppose you will learn in the end whether you're able to make money or not trading someone else's signals. And of course, it'd be very easy for us to publish our entries and our exits. But I guess our approach is based on teaching people in a live environment where you can see all of our entries, all of our exits. You can see how we manage the trades. You can understand the psychology behind the markets. We can inform you of news events that could impact those markets. We can sort of work with you on risk management and adopting a really strong approach to trading. And all of these things are very, very important for us. Like we say on the right of your screen, you know, we're interested in mastering price action and understanding how to read it and how to take advantage of it. And for that, we need to identify opportunities. You need to understand the whole. You need to understand the whole new caveat about a process for you to identify the opportunities. How do you go about executing those trades? How do you manage that trade when you possibly can? And then finally, to sort of look to book in profits on a consistent basis. So we're coming from a trading education perspective, as opposed to a short fix approach that just distributing our trade signals, because we don't think it helps traders an awful lot. In addition to that, it's important that you're probably aware that we do publish every evening for our traders our high probability trading opportunities for the day ahead. So we actually do identify these levels through trade signals every single day already, and that's normally available for you before the European Open. So yeah, that is very much more suitable for those that that don't have the time to join us live. So our daily trade watch could be a really good option for you, Syed, and hopefully you can access our daily trade watch. Have you been able to access? It's only a 4 or 5 minute video normally every day, which looks at the high probability trading opportunities, and we really focus on those levels. So that might be useful for you. Guys, I've just been drawn attention to the fact that we have other traders over at the live trade room now, and as usual I have gone over a little bit. So I'm going to switch over to the live trade room now. Please do read the description below if you are interested in learning how to trade these financial markets. We've really put something very, very comprehensive together, and we're currently offering a 2-week I'm just watching the price currently up on screen. We're currently offering a 2-week free, 14-day free trial, so you can test and find out about all of our products and services without it costing you a penny. And then if you want to stay on beyond that, it's only $9.99 per calendar month. So we really pride ourselves on offering a really affordable education if you are genuinely serious about trading these financial markets. And we have so many live trade rooms every day. Hopefully it's a bit of a no-brainer for you. So do click on the link below and you can gain access to the live trade room now very, very quickly. All the details are there below. And do give us a thumbs up on this video if you've enjoyed the broadcast. I'm currently looking at these prices now, and we're getting a little bit of a pullback off the lows. This is what we want to see. This is not something that we're afraid of. Like I said, markets move in this fashion to varying different degrees. We obviously don't want them to pull back too aggressively, and this is now a structural failure to the upside now for the euro, so that doesn't really bode that well for these trades. but we're going to continue managing these trades over now at the live trade room. Sorry, I do apologize. We do have traders waiting for us. Yeah, so it's all available for you, Syed, in your members area. So do contact either Richard or anyone here at the live trade room, and we can sort out your access for you, so we can get you set up and fully operational very, very quickly. So do give us a shout if you possibly can. And everyone else, thank you as always for joining us, and we look forward to seeing you all next time here at the live trade room. Feel free to connect with us through our YouTube channel. Just subscribe, search the live trade room, and do click the subscribe button and the bell as well, and you'll be notified when we are live. Also Facebook, Instagram, Twitter and LinkedIn. The details are all there up on screen. So thank you as always for joining us. Do take care, and we look forward to seeing you next time. For everyone here, bye for now.